Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris Forsick from Elite Currency. And this time we have two videos, one today on Monday and another one on Wednesday. Last week we just had one, but we did have a Elliott wave analysis update throughout the week. Last week we were looking at a situation where price was about to make an ABC to the upside. To me, it seemed like it completed 5 waves, indicating a wave 1 or A, and this looked like a B, C pattern. We were analyzing it here, saying that this is probably a B, and a C for a red 2 or B, and then a downside. So I think that this was probably 100% correct. I guess there was an upside indeed and a strong downside as expected. Price ran into the fib levels, like the 88.6 fib, and bounced from there. And price made a move up to the minus 61.8 fib target here. Plus, there was a head and shoulders pattern as well, playing out left shoulder, head, and right shoulder. So I think that was accurate. After that, after the bounce, we had basically a first break, then a pullback, and then a second break around the 20 MA, and price falling down to the long-term moving averages. For those that are already SWAT members, you know that it's important how price responds around this 21 EMA, and there was a very good first break, pullback, and second break after the bearish bounce. So all of that taking place, just to give you context, and after that we had a break of this trend line for another move lower. Now that said, although we had a good downside, the price action didn't go very far. I mean, it made a decent pattern. It made a decent impulse to the downside. It fell from 122.50 all the way to 121, which is about 150 pips. Enough pips to make some good profits, but that said, it fell short of breaking this particular minus 61.8 target, which is needed to confirm a wave 3. So, and the bounce was quite strong. So now, bear with me as it gets a bit more complex, unfortunately. This particular situation is not as straightforward and as easy as basically the last weeks have been, in my view. It's been pretty straightforward analysis and trading on the euro dollar. I think that this upside was pretty good. We had an A, B, C pattern. Now things are getting a little bit more complex compared to that. So the problem is that this does not look like a 1, 2, 3. It could be easily an A, B, C pattern. And it's technically still possible if we look at, for instance, this fib from here to here, price responds to the 5061.8 fib zone. It is a very deep retracement for wave 4, but it is possible. So price might still break for one more higher high within the wave C, this being an A, this being a B, and this all being a C, and might still test the top here one more time. Okay, let's put back that fib. Keep in mind that we're looking at a bearish A, a red B, and a red C. And price might tag 122.75 or 123.50 one more time, and then bounce for the wave C, red, and complete red B. So let's take away, that's the scenario if we get a break. I would say a daily candle above the 21 EMA high. Looking at yesterday's candle, that does look like a bullish candlestick pattern to me, right? The candle close near the high, bullish. The close above the close of the day before. So I think a break above the candle, the 21 EMA high, could confirm the upside, and one more break to the upside to 122.75, 123.50, which should create a double divergence and should send this lower in a wave C, if it is bearish as I expect. Okay. Now, that said, you know, the 21 EMA on the 4-hour chart would be important as well. So a break above that could confirm that bullish breakout. Now, that said, there's a bearish variant as well. Let's take a look at the 1-hour chart. Here we go. And it could be that this was a wave 1, 2, wave 1, 2, 3, 4, 5, completing 3, and that this is a wave 4. And down we go for wave 5. So in that case, we'll put the fib from here to here. And it was a very deep 61.8 fib, but still, that is possible for wave 4. So basically, price is respecting the 61.8 fib from both sides, the support and resistance. So if it breaks above the 61.8 fib, it's not likely, in the long-term moving averages, it's not likely a bearish scenario anymore. If, however, it drops and goes up and goes down like this and builds a triangle, A, B, C, D, E, it's bearish, and there's a reason for price to fall. Even if it just makes an ABC pattern like that, it could fall again. Okay. But it would need to make a break below the 20-minute low. In that case, there's a higher chance of price making ABCDE or ABC triangle to the nonsense, and it becomes more higher chance that it becomes bearish, not right away, but after the correction. At this moment, it looks more like an impulse than flag. So if it keeps moving sideways, there's a higher and higher chance of a break, although I'm still waiting for the break above the long-term moving averages and the top and the 61.8 fib for a bullish breakout. Okay. So let's see if price breaks down or up. And if it breaks down, important also to note that there's a high chance of a bounce at the previous bottom. And in that case, it's probably ABC, but always keep an eye on this resistance. If it breaks above that, then it's looking like a bullish breakout. So it's a bit tricky looking for a break up or down, and it might go sideways. There is a European Central Bank ECB event on Thursday. The market might be waiting for that. There might be some movement, obviously, until then, but this week might be slower on the euro dollar because of that. Just a heads up, early heads up there. Okay, so if it does go sideways like that, then and breaks through the support trend line, then there could be that bearish breakout towards the fib targets. And in that case, we're looking at a wave 3 extension and a bigger reversal. Whereas if it breaks above the 20-minute zone on the 4-hour chart or daily chart, we're looking at probably one more higher high. All right, pound USD is even trickier in the sense that, one more thing on the euro dollar, by the way. Two dojis in a row. Or maybe I should say last week was actually a bearish candle, but certainly a lot of indecision. Wicks at the bottom, wicks at the top. A lot of resistance here, as you can see. So from a weekly perspective, I might have give a slight edge to the downside. But if you look at the daily perspective, slight edge to the upside. So it's a bit mixed from that point of view. Let's see. I'm waiting just for the break itself, first of all. The pound USD is a doji and indecision at the double top at the moment. No fractal as yet, but certainly a lot of indecision here on the weekly chart. Daily chart, price going sideways for quite a while. There is, of course, besides the double top, a rising wedge pattern as well that has been broken. And there was a break and retag end of last week. And price is bouncing at this moment. So it's a little bit tricky. Looks quite choppy and corrective. And it really depends, I think, on the breakout here too, because it could easily be a reversal pattern or consolidation for one more upside. But considering the strong top, maybe slightly leaning towards a bearish bounce on the pound, maybe more so than the euro dollar at this moment. Let's take a look at the 1-hour chart. And I'm probably leaning towards a downside, but not right here. There could be a head and shoulders, inverted head and shoulders as well. If it gets higher, for instance, up into this level here, that could be a good resistance zone for a bearish bounce. Okay. So in that case, there could be an ABC pattern up here and a bounce. So that could be a good zone to look for a bounce. Intraday breakout may be above the long-term moving averages. Okay, that could be something to think about. Then there's the option of a bearish breakout. That is a little bit riskier in my view because of the long-term moving averages, and it could create a lot of volatility around them. So there might be a small breakout, maybe down to 140, for instance. if we get a break below, perhaps say this trend line from 141 down to 140, I will double check that target in a second. But to WIS6, for instance, or WIS5 even, maybe we don't even get that far. 140.75, 140.50, anywhere basically in this zone is a quite a difficult layer of support. So the problem is that we can easily get it down and a quick up, and then an ABC like that, and then the down. It might be very complex correction here and very tricky to trade. Not a big fan of the pound dollar at this moment, unless it really makes a clear break and flag on a 1 hour chart and then breaks that flag. Then I think we're clearly in bearish territory, and we will see a further downside. This particular pattern would be good, or a bearish bounce here at resistance. One of those two look like the best, maybe with an intraday potential here if it breaks to the upside. But in that case, I probably prefer the euro dollar for the upside. So yeah, that's my view on the pound. Hope it helps a little bit at least. We have an update on Wednesday as usual. We have a lot of live webinars, of course, this week as well. Check out my SWAT method if you want to learn how to trade or analyze at least the elite waves and trade based on fibs, moving averages, and fractals. Then my SWAT course, Simple Wave Analysis and Trading, is for you. Lots of videos, PDFs, systems, indicators from A to Z. So check that out with an ebook as well, 500 plus pages included. Or you can just try the ebook first for just 24 euros and 95 cents. Up to you. In any case, wish you great trading. Gotta run, and see you soon. Cheers. Bye-bye.